All right, what's up, everybody? Welcome Tuesday Degenerate Show. I'm your number one degenerate, Wall Street Jesus, welcoming all you back. A lot of earnings going on, as you can see on the screen. We got Texas Instruments and Snap beat, and even after a move like this in TXN, oops, she's up on the number. I love this TXN. I love this TXN, and I didn't own it once for a swing throughout this whole rally. It was one of the semis I really wanted to own since the lows, and I never got my hands on it. And there's been flow, just not at the ideal spot, meaning it was up a couple days in a row, or I waited for an extra day of weakness and never came. I got a little too creative, and I missed the whole enchilada. But look at this ramp back in this beast TXN and Snap. I mean, this is the new improved Snap now. This is no joke. This is the new and improved Snap. Snap I did own throughout this rally. I had a swing in it, so can't complain with that. But anyway, we'll talk a little bit about the chase that's going on into this earnings season, and that's all. It's pretty simple what's going on right now. We've been talking about this, right? And the chance of this happening, there were two different types of chase that we may see. One would have been better than the other for us. And it looks like right now we're getting the one we rather not have. Okay. And that's in simple English. Basically, they chase selective names and the indices, primarily major ETFs, into earnings. All right. And, you guys hear melt up, chase, and you probably, you hear those words thrown around a lot, especially from riffraff on Twitter, and they have no idea what they're talking about. There's logic behind when a market acts like this, when professionals have to chase and scramble for exposure. Okay, and think about what happened. If you turn back the clock to late last year, right? We spoke about this ad nauseum. You had a pretty harsh correction. Okay, painful correction. Not a buyer to be found during the holidays. Anticipated Santa rally, all that, the 9 yards. Okay, and on top of it, you came from an economy that was booming, right? Trump pounding the table how great the economy was every single day, to now the R word being thrown around all over the yard. Recession, global recession. So what took place, and we saw it in the price action, actually throughout the whole year, but really started to stem up in October into December last year, you had a lot of positioning come out of the market. Okay, you had a lot of liquidation going on, cyclicals, anything economically sensitive, semis. Nobody wanted to own them because there was a global recession on the horizon, right? And the Fed wasn't doing anything about it. The Fed was actually raising rates into that. All right, I'm not trying to get macro. I'm just trying to give you an idea of what took place then and why we're seeing this now. All right, so lo and behold, you have everybody get out of the market. Literally everybody get out of the market. We saw sentiment readings we haven't seen since Armageddon 2008. That's how drastic it was. Okay, and then what happened? You had the Fed all of a sudden from raising rates. One of the most drastic shifts we've seen throughout history as far as in regards to the Fed. Okay, they completely do a flip-flop and are talking QE. That's how drastic it was. All right. And now what you're starting to see, if you remember, throughout this whole rally on the way up, right? And we were talking about this, there was nothing but negativity. The fundamentals were awful. Earnings were starting to deteriorate. You kept hearing it, earnings recession, right? And the market, what did it do? The market just continued higher, right? Every dip got bought. Company had bad news, weakness, they bought it up. Bad job numbers, bad retail. Remember the retail sale number? Oh my God. Remember that? The panic on the streets? They bought up that weakness the same day. All right. And, that was the beauty of this whole move. That's why nobody believed in this whole move. Because the fundamentals, everything was awful as far as the backdrop. But the market, what did the market tell us? The market was telling us that's past tense. There's a light at the end of the tunnel, right? The yield curve inversion. That's another one. That lasted a solid 2 days there, Trey. But you know what I mean? The market, the price action, the flow, everything was telling us that what we were seeing in front of us and what the riffraff on Twitter were panicking about, throwing, all of a sudden everybody on Twitter, in a financial Twitter, became a macro analyst, right? Showing me South Korean export numbers. Like, are you serious? Okay. And as they were doing that and looking at this rally as a short opportunity, the market and flow continued to do its thing all the way up. And what it was trying to tell us was that was then, and the market is factoring in something different looking ahead. And that's what the market does. You hear a lot of people say it out there, right? The market looks ahead. Doesn't care what's going on right now. That's old news. All right. So, and the market was telling us that, they overdid it. Things weren't going to be that bad. Okay. At least not anytime soon, not within the next 3 to 6 months. There wasn't going to be a recession. Earnings probably wouldn't be as bad as everybody expected. Okay. The Fed was going to stay on this drastic shift and be easy now. That's what the price action was telling us. And now what we're seeing now, okay, now we're starting to see the non-believers out there, okay, who were talking about all the negative data that was out as this market was rallying. Now they're coming to the conclusion where, you know what? Maybe it's not as bad as we thought it was going to be. And they need exposure to equities now. They had no exposure at all to equities. So that's what we were talking about, the chase, right? We kept looking at the hedge fund exposure chart. We kept looking at these, the fund flow charts, right? The speculative exposure charts, all that stuff was telling us that they weren't involved. And that's why, guys, when, there's nothing better, and we were talking about this throughout, but there's nothing better when the market, when price action and flow is doing one thing and the news and everything else is on the complete other side. There's nothing better. Everybody fears the pullback then, and I know it's hard. It's easy to say it now, but around that negative news, everybody's worried about the bottom dropping out and the market falling apart. And believe it or not, there's less of a chance of that happening then, with everybody expecting it, than when you get the coast is clear and the news starts to become positive again. All right. So that's what's happening now. And to be honest, we haven't seen them go all in yet. It's not like they were all out. Trust me, I'm not exaggerating. Okay. They had no exposure. They were net short equities for a good chunk of this rally. Okay. So a lot of times you'll see them flip flop and go from net short to all in long, okay? And that's not the case, at least up to now. The hedge fund exposure, again, up until it's a couple day lag on the chart, like you guys know, on the indicator, on the reading, whatever you want to call it, up until a couple days ago was at neutral. So in other words, they're not net short anymore. They're basically at the zero line. Where a lot of times, again, I'm using it as a reference, I don't have it in front of me. Remember, we were looking at that huge spike that shows when they finally capitulate and get all in long. And they have to. They have to. The longer this market continues to do this for, they have no choice. It's like they're damned if they do, damned if they don't. If you manage money and you have the market doing this, okay, and you have a name like Facebook doing this, and you can't show Facebook on your books, you're dead anyway. So whether you think it's going up or down from here is irrelevant. You need to own it at this point. You need to own it at this point. Okay, and that's what's going on right now. Why are they slamming Facebook every single day? Like you guys saw today again, right? In the midst of what? A 30-second span, 5-6 sweeps in Facebook up here. You know, why is that happening? Because if, God forbid, Facebook knocks the ball out of the park this quarter and they don't have any exposure to Facebook, they're finished. They're better off owning a piece of Facebook and having it losing money off earnings than it running away from them off earnings and not having it. As crazy as that may sound. And if anybody managed money out there, they know exactly what I'm talking about. So that's exactly what's going on now. Okay. So there's good and bad, right? There's good and bad. What we wanted just even a little pause, all right, around the first couple of weeks of earnings season, right? Maybe Facebook comes in a little off numbers. I'm using Facebook as an example. I'm talking about Facebook, Texas Instruments, you name it. Maybe they come in a little off numbers, and then boom, we can buy the weakness, right? It gives us that nice entry off a little breather. But so far, you know, I guess the earnings that have come out have been solid, and right now there's no chance of that. There's no chance of that. So they're going to trip over themselves to get in these things until they report. And I'll tell you what, the opportunity may be if some of these things sell off earnings, that may be the opportunity. Because they need to still own these things. All right, so there's good and bad. Because the good, again, the bad, you're probably saying, where's the bad? The bad is, for me, like I don't play earnings. So I'm not going to size up in a Facebook here, you know, for a couple day trade into earnings, right? You're not going to buy Facebook here unless you're day trading it, scalping it, or you're going to hold through earnings and place an earnings bet. So that's where things become a little tricky for me. Again, maybe your style is different. You know, so that's the bad part of it. I would rather the chase stem up post earnings, and then you got that clear window where you can, you know, you can size up a bit. You don't have to worry about the crapshoot, add-on weakness, that type of thing. But it is what it is. It is what it is. All right, so, and right now, like I mentioned earlier, not to bounce around, but I mentioned earlier, they're not in an all-in situation here, okay? It's not like right now we got to take cover because when they're all in, usually the market catches them. That's usually when the market tops out, once they capitulate. Just like when bears capitulate on the downside, right, into weakness, markets usually top out around where the non-believers capitulate all in on the upside. All right, so we're not at that point yet. And you can see it in a lot of the stuff out there, okay? Because you look at like Facebook, right? You look at Netflix. You look at, I'm trying to think of other names. Yeah, Qualcomm is just getting stampeded to death. Disney, right? It's a handful of really strong names that the chase is on. It's not in the whole entire market, every single sector out there, okay? And the ETFs. We'll talk about that today. It was psychotic today. For those of you who weren't around, literally that's all that took place, in my opinion, today. Okay, market, was up. There was some flow out there. I was anticipating more of just, some chase flow, some earnings positioning, and that's it. And then all of a sudden, you get a wave of ETF sweeper activity. And it was the majors. They attacked SPY, the Qs, IWM, not as much, but mostly SPY, the Qs, a little healthcare, a little XBI, but SPY and QQQ, they annihilated. And that took place, I think it was right around here is where it started. And then that's where, so what happens is when they're sweeping SPY, Q, QQ, right? One after the other in size, the market maker's got to hedge off that risk. And that's going to add to the momentum, to the juice. And that's where you get, when there's no sellers, no major sellers out there, that's where this comes from. So we'll take a look at that today. And especially for those of you who are members, something to keep an eye on. Not even in chase environments, just in general, when you see them really get aggressive in the major ETFs at once in a wave like that, that's usually a good sign that there's some, momentum, some nice juice out there for intraday stuff. All right, but that's, the chase primarily has been in SPY. I forgot where, I think I got it from Bloomberg, right? That chart, I don't know if you guys remember, that showed, I think, the highest reading of call buying in SPY ever. Because that's, you want exposure to the market, where you're going to go, number one, SPY, right? All right, and so that's what's going on here, okay? And listen, there is sentiment out there, especially on an intermediate term basis, not so much, believe it or not, on the short term basis. Any little breather, things cool off. But on an intermediate term basis, okay, there's some bullish sentiment out there. And that's normal, okay? Don't get me wrong. I'd rather it not be there, okay? But when you have a market that looks like this, it's obviously going to happen, right? There's hardly any pullback longer than 2 days. So what I'm referring to is like the daily sentiment index, some surveys out there, stuff like that. The intermediate term stuff, the smart money, dumb money indicators. A lot of you guys look at Sentiment Trader and stuff. Those are going to be at bullish extreme. There's no way around it. Okay. I think the one thing to keep an eye on here, to be careful about, is on the positioning side, because once they capitulate, that's when things can get a little frisky. There's another, before we get into some of the flow today, I want to show you one more chart. I think I got a little Sentiment Trader here. Hold on. And those of you who are members, we didn't have a Saturday webinar because of Easter, so we didn't get a chance to look at all this stuff in depth like we usually do. There wasn't too much change, but I'll show you something else here. Okay, remember the other aspect of positioning we were talking about, the real smart money, right? Hedgers and the specs and futures and stuff like that. So here are I had to crop it a bit, but here are the specs, okay, in everything, ES, NQ, the whole bowl of wax. All right, just because, and I'm showing everybody this because you hear, there's exuberance out there, like 1999, everybody's bullish. This is the speculative money out there, how they're positioned in futures, okay? This was off the 2015, 2016 bottom. A lot of non-believer money there for a good part of the move higher. And then they finally capitulated. You see right here? They gave in, no coincidence, right near the top before the first legitimate pullback. All right. Here, you can see again, net short. And even after this rally, they're still down here. Okay. Even after this rally, they're still right here. There's no lag. It comes out weekly. This comes out every Friday. There's no lag. This is Friday's the lag, basically. All right. So, again, Tim, we've been looking at this thing every week. So, again, when you're talking, I'm not talking about, is there bullish sentiment out there? Of course there is. There's going to be people who aren't feeling as negative and bearish as they were at the lows, because they're starting to see some positive signs, and price action is number one on that list, okay? But when you hear people throw the word exuberance out, right, and stuff like that, bubbles, exuberance, all the, where's that? I don't see that. I don't see that. All right, and like Ani's got a good question, like sentiment trader, the smart money, dumb money, okay, what that indicator is made up of is indicators that are usually right are considered smart money, or more right are considered smart money. Indicators that he follows that are wrong at bottoms and tops are considered dumb money. That's what that indicator is. So when you hear dumb money, it's not actual dumb money. You know what I mean? It's based off indicators that are usually wrong at bottoms and tops. Okay, and a lot of sentiment's made up like that. All right, but when you see a market rally like this, on price action alone, a lot of those sentiment indicators are going to be bullish. Does that make sense? You know what I mean? Off the price action alone. Like, I give you another example. The CNN fear greed, right? You guys know that. Price action makes up a chunk of that indicator. Price action, just price action. Above moving averages, how many stocks are a certain percentage above so-and-so. So that's what I'm saying. A lot of the heat that we're seeing on the intermediate term sentiment stuff is hot and has been, had bullish. I wouldn't say hot because a lot of them aren't hot yet, but bullish, like smart money, dumb money. That's a lot of it's based off price action. Okay, what's left, and in my opinion, is more important, is this stuff here. Okay, the positioning stuff. Now, some that I look at, like on the option side, are not as favorable as this. Okay, some are getting there, aren't hot yet, but getting there. All right, but the point I'm trying to make again, there's no exuberance out there. All right, that doesn't mean put your guard down, get long everything into earnings. and let's be morons. You don't do that here regardless, right? But I'm making this point so that the noise out there can sometimes fool you into something different taking place. And listen, these things can move quick. Okay, they can move quick. It only takes, come next week, we may see these guys, all this positioning get close to being up there. All right, but this is real positioning. You know what I mean? This is the stuff that matters. And not only that it matters, this is what's taking place right now. This is exactly what's taking place. Why is there a melt up? Why is there a chase? Why is the market acting like this where every dip gets bought and there's no pullback? Because nobody is in it. Nobody is in equities. They're starting to get in now, but nobody was in it. How could they sell them if they're not in them? Unfortunately, we're going to lose. And this is what I was telling you guys. I don't know if I was talking on this webinar or the other. If you guys remember, I was telling you, if you're bullish, you want a pause here, right? We want a breather here. We don't want the market to melt up here. And why was I saying that? Because we're losing the bears. We're losing that short ammo that we had, right? We didn't even mention that. How many players out there that you even know were trying to short each and every rally along the way here? That only adds fuel to the fire, right? They try to short this dip right here, squeeze them. We're rolling over, short that there, squeeze them. Unfortunately, as this happens now, we are going to lose that. Because they give up. Or they run out of money. One or the other. So, and then that's what happens. Once everybody's officially in and the shorts have given up, that's when we're dead. You know what I mean? That's when we're dead. We're in trouble. Because there's nobody left to buy. There's nobody left to buy. So where that happens, Mike, I mean, honestly, we've seen some of these melt ups through my day get crazy. I mean, the most recent melt up, you guys remember, where there was a chase like this? You remember, we were looking at, was this into 2018. So it all depends how quick, I guess, they capitulate. When, you know what I mean? When they finally give in. But if they're forced to chase higher prices, that's where you get this here. You know what I mean? And that doesn't end well. That's the problem. Because then if you look at those charts like I showed you, when everybody finally is in, it takes one little thing, like that VIX panic attack we had in February, and you got everybody gets caught. And that's where something like that could happen. So that's what you got to keep an eye out for. All right, let's look at, I don't want to take up too much of your time. Let's look at a couple names. Me personally, guys, I'm being dead straight with you. As far as like positions, I don't have much exposure at all here. And it's more because of earnings season, in my, to be dead honest, than anything else. I don't have too much exposure, overnight exposure, unfortunately. But, again, that's just my style, because I don't want to play into earnings. And, if I'm going to be quick, I own a couple of things like equity that I can put stop losses on and stuff like that. But no, I'm not in a full position anywhere. Again, mostly because of earnings. After we get through, probably like next week, where I can make heads and tails out of the flow, make out rotation, maybe some better set, because there's some decent setups out there without a doubt. It's got nothing to do with the setups. There's already a couple names I would definitely swing if it wasn't for earnings. So it's not that these names are cooked. Let's look at some of the names. Here's a couple of orders that were decent looking. This Sony bet was nice. Jan Sweeper, 52 and a halves. You know, look at this name. Again, they all have earnings. All of them. They all have earnings. So this is where Sony is here. Here's earnings. You know, I don't know if you guys remember, we made, a few of us made a decent hit on Sony. I think it was off this dip, right? I don't think it was, yeah, it was this dip. They bought blood, and then it just didn't have a down day after the sweep. A different spot here off a tiny little breather. You got earnings coming up. So keep an eye on it. You know, maybe you get a dip off earnings and they come back for it. That would be a better spot. This sale was one of the better looking orders today. Software name. What happened? Sale. Oh, here it is. Like, look at this spot. See, and that's the thing. Like, you look at some of these software names, they've been consolidating nicely. They haven't gone nuts. They're doing what they need to do. You look at all the software names for a couple of weeks now, they've been consolidating. But look at this. All right. Sell off, started the year, ramp. Needs to breathe. This is a beauty right here. No? Beauty. All right, so we would never want to chase this, right? We never want to chase into that. We want to wait for this. So now we're waiting for this. Hopefully, we see a sweep to give us a heads up when this thing might end. Boop, here's your sweeper, and a nice one. What's the problem, Jesus, you ask? Well, the problem is, if you do put on a position here, you got earnings on May 12th. All right? So that's where you got to weigh your risk reward. Do you think you get a big enough move for a trade from now to May 12th? Otherwise, it's an earnings bet. No matter how much you like the stock, it's an earnings bet. You could buy, size down and quicker trade type thing. I don't. That's why, guys, I size down a lot during earnings season. I don't. How you know it's tied to stock, Mike? Good question. Mike is asking, how do I know if it's tied to stock? Because a lot of times members will see me mention or post the stock that's tied, but sometimes we don't know. So I get from the trade alert data. A lot of times, Mike, I will get something will come in listed tied, and I will see that. All right, but during earnings season, there's a lot of tied orders, and we don't get them all. Some of them are delayed. Like, for example, you'll see an order go off at, let's say, 12 o'clock, lunchtime. No stock, tied. It's not showing anything. Then you look back a couple hours later, and there's stock there tied. It's tricky during earnings. Like the Tesla example you're telling me that you're talking about, Mike is talking about Tesla. There were blocks that came in with stock, tied to stock. So I know they were definitely tied. Some of the other orders, I don't know for sure. I'm being honest. But any block in a big name, I'm being honest with you guys, any block in a active name, Microsoft, Tesla, during earnings season, if you ask me, you take that block and you flush it down the toilet bowl. Useless. because I would say 98% of those blocks are tied. 98%. All right, but yeah, so here, this is an example of, the confusion during earnings season. Sale, I love the setup. Like I said, the order, you're not going to see much better as far as an order is concerned in sale. Okay, it's not a name that catches a lot of option flow. Sweep, opens, everything about it is perfect. So it is what it is. That's where you guys got to put your thinker caps on and figure out what you want to do. Intuit caught another nice sweep, caught one yesterday. Some of you may remember this name. This caught a nice sweep at a much better spot earlier in the year. Now this thing's gone nuts. So, but another decent order here, back-to-back days. This one doesn't catch earnings. I think that's why I put it on here, even though, usually I put the initial activity on there if it's moved. But let me see here. Right, guys? This doesn't catch earnings, I don't think. May 3rd, no. Now, it could be playing off somebody else's numbers. I have no idea. But this particular order doesn't catch earnings May 3rd. I think yesterday's did. All right, so Intuit. Yeah, Norris, I know you like to play. I don't know. Could be a play on somebody else in the group. I really don't know, to tell you the truth. I got a couple questions on this name, CCJ. Some decent size action, okay, but it's earnings action. CCJ. 5, yeah, Intuit's May 23rd, and this sweep was for May 3rd. So you see, doesn't catch earnings. The one yesterday, I think, did. But maybe some of you want to trade it off a dip. That's why I throw them on here. During earnings season, as I told you guys several times, those of you who are members, any good-looking order, I'm going to put on here no matter what. Okay, because you guys may like to play it or look for a dip in it. You know what I mean? For a trade. Even though if they catch earnings, I'm going to put them on the top order list at the end of the day, no matter what. CCJ caught 2 decent orders today. Again, not a bad spot, right? Does this look too hot to you? Doesn't look too hot to me. Now, she's slow. I think, honestly, a name to keep an eye on post-earnings. And earnings here, not too far away, May 1st. So keep an eye on the CCJ post-earnings if you like that. Light, this one caught a couple of sweeps today. This has been a hot stock, too. Look at this. Melt up right there, too. You got earnings in Light May 7th. There's somebody else in this sector with Light that gets mentioned a lot. What's the other name? Isn't there another name that anytime I see an analyst call on Light, they always talk about that other name? Anybody know what it is on this Light? AAOI, maybe. Maybe it's that. Anyway, May 7th earnings. And here's the 3 sweeps. See, I like that. I like when they hit it a couple times like that. So again, I'm not crazy about the spot there, but if you like the name, when they hit it like that a couple times, sometimes you get short-term momentum, and that's what you're looking for if you don't want to hold through earnings. Like this. Remember this one yesterday? MDB. Look at this. That's the unfortunate part. Look where they hit this thing. Like, this is perfect, right? Looks like the sale, doesn't it? Look at this. Right? You don't want to chase this big move. You finally get a breather. This is not a name that catches a lot of action. You don't know if they're going to hit it. They boom, boom. Not one, two sweeps. Yeah, Tim, I know. And this one you had a little time because earnings were in June. They were June sweeps. So you had some time, if you wanted to catch a trade out of it. You got the trade today. I think Tim said they doubled, right? Anyway, I didn't play it. But that's what you would be looking for, in some of these things. So light, there was one more, what'd I do? Hold on. There was another name on here that caught action late. Oh, that's the last one, SPR. This is Spirit Airlines. I was talking to somebody, I forget who the hell it was, who was all junked up on this thing. Another good spot, another solid spot. Earnings May 1st. Earnings May 1st. Oh, you know what somebody, I think the Boeing incident somehow was beneficial to them. I don't, because AAL and them would have to cancel stuff. Something to that effect. Spirit. That's what it was. That's right. Anyway, same thing, like the others. Ramp. Nice breather. Right? And they come right here. So if you didn't have earnings in the way here, you got room. Even if she hangs out here, you could add. It's ideal. Keep an eye on post earnings. What names? I see you guys throwing names out there. STNE had a lot of flow. When was it? Friday. But I wasn't crazy about it. The only thing that looked interesting was there was some put selling. But here's the problem. The put sellers, again, they catch earnings. And there was a lot of tied stock there, Tim. A lot of the stuff in STNE was tied to stock. So you know what I mean? I can't be as confident that all the order flow was clean. Like the put seller looked clean, but there was tied stock all around it. So I guess, listen, if you like the name, yeah, there was a put seller today. What was the put seller? The 25s from May, right? I don't even show earnings. What are earnings in this thing? Anybody know? June? No. I thought it was June 2. Somebody told me Frank is saying 5/29. Oh, that doesn't catch May then. Yeah, but that's what I'm saying, Tim. I got 5 different dates for earnings from 5 different people. So double check it. Earnings tomorrow. Yeah, the other name too, catching a little bit of action, is good old Pags. They all got beat up for the same reason, but Pags already bouncing back. So listen, it's a preference thing. I wouldn't get junked up on this STNE like it was clean flow. You know what I mean? Trust me, if it comes in, if the action comes in, thanks, Frank. That makes me feel better. Thanks. If they get aggressive in this thing, I'll shout it out. Because you know me, I love buying blood. It just was a lot of spec action there, a lot of tight action. It just rubbed me the wrong way. I wasn't sold on it. The put seller made it look a little interesting. It's almost too good to be true, though. No, they sold the May 25s at 25. Clean? I don't know. Maybe, but I don't think so. CNC. Oh, yeah, CNC. Oh, yeah, that had a rip and then came back down again, right? When's earnings? When's earnings, Frank? Tomorrow? Oh, wait. They had earnings. Did they? Today. Maybe today, this morning. Tree saying Snap is red now. Yeah, see, Frank, it's like dodging landmines, right? These earnings, even when you think you know when they are, you don't know when they are. They sneak up on you. Oh, they're the worst, Frank. They're the worst. And not even that. You could be in a name, right? And you're like, oh, all right, I got a month till earnings. But then two other names in the same group shit the bed. You're dead. Right? You're dead. It's just, listen, risk goes up dramatically during earnings season. We know that. You know what I mean? Come on. You don't have to be a market aficionado to know that. Yeah, they're exciting to play. It's fun, but risk goes up dramatically. So there's nothing wrong with playing. You just got to take it easy. That's all. Frank says, I used to love earnings, but I got burned consistently. That's you and everybody and their mother, Frank. You know, that's the killer, Frank, where I had to, like, I had no interest. When you get direction right and you lose money because it was already priced in with the implied vol and everything, that would frustrate the hell out of me, right? Wow, Tony, TXN too? Wow. Maybe we get some weakness tomorrow now. Maybe we get some weakness. I'm getting a little too crazy now. I think, and that's another thing that I think we got, if we ever get it, like you're saying, Tim, if we get some weakness off earnings, I think it's going to loosen up a lot of stuff for us. You know, a lot of stuff, especially the cyclical names, you know, that type of stuff. I'm interested to see what this cat does tomorrow. Oh, Cat and Boeing tomorrow at the Open? There's a lot going on right now. Yep. A lot going on. Yeah, so like I said, listen, you all, we talked about this, you know, for a couple of weeks in preparation for this, you know, especially if we go in a little on the hotter side, meaning without a pullback. Yeah, you're going to play nice and easy, but post earnings, especially if there's weakness, that's where we can, you know, play with a little more confidence. And not even a lot of weakness. I'm talking about this, guys. I'm talking about if we get, you know, something like this again, and sweepers rotate aggressively into a couple groups or something, you know, that's where the money is. Well, these little breathers like this, you know, and you catch a name at a right spot. I don't do it because I'm a moron, but if you give the name a little leash, you get some movement. But here's where you can, you know what I mean? You can play with a little size. Post earnings, you don't have earnings to worry about. Just a lot of the headaches get out. Yeah. Those biotechs off weakness, like, you know, if you don't have you have a couple earnings there too. But if you don't have earnings, look at that. You know, that's all you need too, Tim. You need little breathers, right? Little breathers. You guys hit a couple biotechs yesterday into today. IBB. Yeah, XBI had a couple of sweeps. What names did you guys play today? I saw you guys mention a couple names. REGN. Oh, look at that. Wow, some of they got plastered, huh? They got plastered. See, like, for example, here's just another example. I know you guys know what I'm talking about, but just in case some of you are unsure. Okay, if let's say we did catch sweeper activity into these down here, right? Without earnings in the way, you don't have to take this off the table. You could build some size if you want with a little time. And I'm not even talking about you're gonna move back to here and you hit it nicely, right? At least you could give it some leash. But the likelihood is it's not gonna happen before earnings. That's the problem. You got my Degenerate Lotto. Nice, Paul. Let's see. JD looks pretty decent too, right? Let me see JD. Wow, JD looks good, right? When's earnings in JD, Paul? Soon? Oh, here it is. May 8th. That's a 9 or 2 in JD. Look at that. But you see what we were talking about, all kidding aside? Remember we were talking about, like, you can't chase this, right? You don't want to chase that. You want to wait for something. Look, there's breathers out there. There's been breathers out there. The whole software sector, if you look, right, the MDB, breather, right? Even Salesforce and the big names. This is, look, chop. So it's not like things are dramatically cooked. You got some cooked stuff out there, right? The stuff they're plowing into. Microsoft, my God. That's another name today, tattooed again. They're sweeping Jan, $500,000 sweeps in Jan like they're bubblegum. They just need to own Microsoft. That's what it is. They need to own Microsoft into this quarter. Right? But it looks completely different than some of the stocks we just looked at. Microsoft would be considered software too, right? Multinational, though, I guess that's why. But not everything is cooked. So we may have some targets in a couple of weeks post earnings here. All right, anybody have any last questions or anything to add before we call it a wrap up? East Coast people have some nice weather. Let them enjoy it. Bison, yes, Bison caught some action today. I don't have a full position, but I have a piece of this Huya that it actually still looks good to me, but looks dead as a doornail. But these things look like they're getting ready to me. IQ, we spoke about that, right? They all look like they're getting ready. Do I have to throw the E word again, earnings? That's the problem where you don't have much time. Which one? I just saw a name. AMD, that looks great. That looks great. AMD. But April 30th, Mute, April 30th. That's when they report. You know what I mean? What kind of move are you going to get by, if you're looking for a quick move, you could possibly get it. But, you don't want, you want to be able on any of these setups, you want to be able to be patient enough to catch this, you know what I mean, without the risk of earnings. They might not give it to you before earnings. Maybe. I'm surprised they haven't chased AMD. I really am. I thought they would. I thought it would catch a lot. It caught some action, but catch action like, the Facebooks of the world and all that. Because AMD, when they buy it, it can swamp a whole board, all that action. MPC, yeah, again, looks good to me. You got earnings, but looks good to me. Setup wise, you got earnings is the only problem I see with MPC. There's been some nice oil flow too. They continue to buy this Hess. That's been one of their favorite names. Look at this, HES. They've been buying some of these smaller garbage energy names like this ESV, starting to heat up. CVE, they have earnings, I think, tomorrow. But energy, BP, there's been sweeps in several energy names. Yeah, all the energy names look decent. I don't know how important earnings are here in energy, if it means that much, but I would definitely keep an eye off any earnings weakness, without a doubt. Any earnings weakness I would keep an eye on. Lyft caught another little sweep before the bell. I don't know if you saw that, Tim. Little one. Yep. Yeah, the others did well already, and they were probably on the same page you were and caught the upgrades today. They could have been playing for that more than likely. Or the initiations, I should say. Amazon caught a sweep today, right? Weeklies, I think a couple bets. There's your chase. I know, earnings all over the place. What do you want me to do? I can't even say the word earnings anymore. I'm tired of saying it, right? I told you guys on private Twitter in the room, I can't say earnings in the commentary anymore. It's getting me sick. TLT. Oh, you had a nice breather there. Yeah. Looks interesting. But that's like anti-market, no? So basically you're playing a market pullback in a sense. Yeah, true. You know what? You're right. I don't know if the market would really come in if rates move a little bit anyway. Gold looks like garbage, right? Needed a breather anyway. I guess because the dollar's been strong. I don't even know. But we'll see. Post earnings, guys. Anything you like right now, keep the name on a list. Even if you played a little into earnings, keep an eye on it post earnings, especially if it's down. If it's down, it's even better. If they sell it off, there's your spot. Especially these cyclical names, Oh, before we go, I'll leave it on this note. You can't forget about these yet. I mean, I don't have it anymore. I sold it like a piker. But if you get weakness in these banks, you can't ignore them. You can't ignore them. You want to talk about under-owned, no exposure? If this bank rally has legs, the one group that had zero exposure throughout were the banks. Nobody wanted the banks. We talked about it over here, remember? And then you had the yield curve scare that shook out everybody. Oh, the poor souls. Look at this. Right? We were talking about it out of this breather. Looked like it was getting out. Everybody came in here thinking they're going to catch it, and it got shaken out here. And then what happens? Whoop. But don't forget about these banks. Because there's a good chance that when the other things cool off, you know what I mean? The Microsoft, the Facebook, the Amazon, they got a lot of places to rotate to. So you got to keep an eye on it, especially post earnings. The banks are all done with earnings. And they're breathing nicely here. I think Goldman, right, caught a little sweep October today, but a little one. Can she ever get out, Goldman? Look at this. We want to see a nice missile right here. Oops, right here. All right. Nice back-to-back missiles. Bink, bink. And set up a move out of here. You never know. Yeah. Can you imagine you had to drink off the word earnings? Croak on a corner here. All right, guys. Enjoy the night. Thanks for stopping by. All right. Keep an eye on the post-earnings action. Nice and easy into earnings. And we'll take it one day at a time. Be good, everybody.